The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Grigas from Options Express.
Welcome back to the Option Block, and we have another interesting show in store for you today with our usual gang of suspects, starting off with good old Mike Tusaw from Know Your Options. Mike, how you doing?
Doing well yourself.
Good. We also have Rob Kurzakowski from Options Express filling in the rotating Options Express seat. Rob, how's it going today?
I'm doing good. How are you, Mark?
Good, good. All you Options Express guys have those nice deep voices. I like it. And then, of course, being even more tinny than usual because he's on a speakerphone this week, is the greasy meatball himself, Mark Sebastian from Option Pit. Mark, how are you doing?
I'm feeling like a bigger deal than normal, if that's possible.
And then joining us today in the interview segment and also for essentially the rest of the show is Andrew, is it Giovinazzi?
Giovinazzi, you got it.
Okay, perfect. And he is from Acumen, and you probably know them from a lot of the content you've seen on the Options Insider from these guys. They have some interesting volatility mapping software that makes a nice visual display of various implied vols across multiple options products. And I know a lot of our listeners... A lot of our listeners and a lot of our readers like that kind of stuff. All right, so with the full crew on board, let's dive right into the trading block.
The trading block.
And welcome to the Trading Block. This is a segment of the show where we discuss some of the interesting macro developments we're seeing in the market right now. The bulls were off to the races again today. Just can't stop these bulls, seems like, lately. We closed the end of the day with Dow up about 100 points, S&P up about 15 and a half handles, and VIX down about 2 points. And a lot of that bullish sentiment seemed to be coming from the fact that retail sales were much stronger than expected. Black Friday seemed to really kick things into high gear even more than people expected, as well as some of the rest of the month also proved to be a little bit stronger than expected. At the same time, we had new home sales just exploding, up 10% last month, which I guess goes to show that kind of record low in the 30-year that we discussed a few episodes back really seemed to nudge some people to say, finally, it's time to buy. So between those two things, the bulls are just up in force. So what do you guys think about what's going on right now?
You know, I've been really impressed by this run-up. The crazy thing is the VIX has been reading down $2, down $2.5%, excuse me.
You did it again. We should have a little VIX jar. Every time you say dollars, you put the buck in the VIX jar.
Every time you say points of bucks, you have to put down in the VIX jar. At the end of the year, we're going to Mark Longo and extra big frappuccinos or something.
I like the idea even more now.
Yeah, no kidding. What I noticed yesterday, and kind of carrying through today, was yesterday the VIX read down to just under 2.5%. That is a massive move in the VIX, but real strike volatility was only down about 0.75%. Today we're seeing something a little different. Volatility actually fell a lot more today than it actually did yesterday. And so that was what I found interesting. It was almost like we had that big move yesterday. Implied volatility comes in a little bit, maybe lulls people into buying, and then the big thwack today. And we go and buy some premium, and that premium probably was not feeling very good by the day's end.
No. Oh, and listeners, by the way, if you're wondering why Mr. Sebastian and Andrew are even a little bit tinnier than usual, they are on assignment in New York and coming to us via speakerphone. So that is why they're sounding like they're coming from another galaxy. What about Mike and Rob? I know you guys are heavy into the commodities. What are you guys seeing today in the commodity sector?
Well, we're seeing the retail sales and the especially the pending home sales really drove copper higher today. It's now trading around that elusive $4 mark, just under the $4 mark, and it's historically it's been a stumbling block for the copper market. I think that the market may be able to see some momentum. Actually, the momentum indicator relative to the RSI and into price is kind of on more of an upswing, suggesting that it may be technically stronger than in the past. Also, we're seeing crude oil now attacking that $90 level, and it's kind of boom or bust here for crude oil. If traders, if we're not able to push through these high 80s here, we may tumble back down to the $80 level, and that becomes really dangerous territory because you start seeing a little topping in the chart. And then one story that kind of didn't make the newsreels, and it really didn't make an impact on trading today, but is really big news is the fact that gold imports by China are kind of skyrocketing lately. The government has previously had a pretty good stranglehold on what gets imported and what, as far as the Shanghai exchange, and they're pretty much giving them the rubber stamp and letting speculators import a lot more gold. China being the large investor and having this large pool of money, obviously they're not going to sit on the sideline, and and they've already voiced their displeasure numerous times with the dollar and the euro. So we may see a lot more gold investments. So possibly more strength down the road and a tighter physical supply of gold.
So we're going to see China bidding up the metals bubble again then, huh?
Yeah, that's certainly, previously the government really tried to restrain people from buying physical gold to get them to invest in other products and invest domestically. And I think that at this point they're just letting speculators have at it and import gold at will.
Could that be some sort of inflationary thing that's allowing them to kind of buy up this gold? They don't want the economy to get kind of overheated in China. Gold running up is a lot of times a big catalyst for future inflation. So maybe the Chinese are trying to cool down that economy a little bit and let people buy some bling. Either that or I've heard that there's a new gold grills factory opening up in China that possibly PI may be investing in. So that's the other thing I've heard.
Your humor is a little muted when it's coming across that speakerphone. Takes us a little bit to figure out the punchline. Quality nonetheless.
It's always my best stuff that gets killed by the speakerphone.
That is, the technology is your worst enemy. And Andrew, what are you seeing on your various systems and your screens today?
Oh, actually, I was just doing a recap and looking at all of the stocks that nobody's really looked at over the last couple months, but actually had some pretty decent moves today. So it almost felt like some money was moving to names that nobody cares about. But after we've had a couple days of rally, I always call them unloved stocks, and I write about them all the time, where stocks that make money but nobody cares about. So, that's what I was just checking, where there's actually some activity where stocks that aren't moving, cheap implied volatilities, and they're moving today. Maybe it's time now for the end of the year, at least from what I was looking at, those stocks might start catching up with all the darlings, the Amazons and the Chipotles and all that stuff.
Mm-hmm.
So,
Oh, Chipotle. Now you're speaking my language.
yeah.
Chipotle is actually one we've been trading quite a bit. That thing's been off to the races lately. But actually, this might be a good time then. Instead of getting into it here, maybe we'll dive right into the interview block then, and we can get more into what you guys do over at Acumen. Unless Mike, you had more you wanted to toss into the commodity roundup.
Well, I think just in the world of gold right now, for example, to kind of add on to what Rob was saying, as well as what Mark was saying, with the news of houses actually selling, which to me just seems kind of shocking in this country, just from how long it seems that we've been hearing all the bad news in the real estate market. I think that's definitely a sign with which inflation could start to actually move again. And gold the last couple of days has been relatively flat. And with the news of what's going on with home sales, I think we're at a pretty pivotal time right now on gold. So I think the home sale news is obviously something that is big. And I think that's just going to be It'll be interesting to see tomorrow, and we can talk about this more in Around the Block, how all the numbers that come out before the bell offset the numbers that came out today or add to them.
Are you guys back in your collars, or?
On gold, we still are. For gold, we're still on GLD, the 130, 140 collar, and we've been in that for a while. With silver, it's one of the ones to where right now it's high enough to where we're in the process of getting back into it just with less shares. So it's one where we feel that if it does continue to go higher, obviously, we want to be a part of it in some way, even though we aren't going to be a part of it with the original amount of shares. But if it pulls back and goes down, we'll have the puts on to where we'll buy more. We intend to buy more shares on the way down, should it go that route. So we're in the process of doing that right now. We're just getting everyone's accounts set up, organized, and getting all the contracts set.
All right, sounds good. And since Mark and Andrew have to run pretty soon, we will close out the trading block and move right into the interview block.
The interview block.
And welcome to the interview block. This is the segment of the show where once a week we find someone from the options industry, some luminary, some guru, and we lure them onto the show through all sorts of dubious means, and then we proceed to pick their brains apart. And this week's victim is Andrew Giovinazzi. Like I said in the top of the show, you probably know him from his blog over at Acumen and some of the content we have up on the Options Insider from them. But Andrew, I'll let you introduce yourself. First off, some of your background in the options business and how you got into this relatively specialized field of it, and then also what you guys do over at Acumen with the blog and the different software that you have.
The easy thing is I was a floor member for 15 years, from 91 to 2006. Took a year off, probably a little early, but who knew? The next part, I first walked onto a trading floor in 1989, though. I saw a guy sell some calls, and they went out worthless, and I thought if this Jamo could do it, I certainly could do it. And I was on a seat a year later, and I started working for a firm called Group 1. I ended up trading for them for 10 years. I trained pretty much a good percentage of their traders that went through there as well. So besides being a floor trader, I ran the DPM post in Chicago.
I didn't know Group 1 was that old. I thought Group 1 was a more recent development.
Oh, no, I was 20 years old. I actually helped open the DPM post in 1991 there. So they've been around for a while. The guy Dominic that trades the VIX now, Dominic Salavino he was one of my early pupils, although he's far outstripped me since then. But he was just a young kid back then. Anyway, and I left the firm on my own little fun with a friend of mine, called Henry Capital Management, in 2001. And I just, in 2006 with the VIX at 9 and electronic trading coming, it wasn't much fun anymore. So I took a year off, and then I ended up finding Acumen through a mutual friend. They had a 3D technology to basically help you with broad market quoting. So what I wanted to do is I wanted to recreate the noise of the floor and the activity of the floor in a 3D environment. So what you do is you can see what's moving in any security on the floor or in any trading area at once. So what that does is, instead of just looking for alerts that you set up previously, you have a live 3D space that constantly lets you know what is happening across the option market. And basically my job as head of business development, I also developed the product. We've patented an option landscape and things like that. And we're just bringing this product to market now.
Yeah, for the listeners who haven't seen it, it's a very visual product. And I'm actually looking at it right now, and it's kind of like you're almost navigating through a 3D topographical map of a city landscape, with the various buildings being different implied volatility products or whatever the underlying is in the various products you're looking at. But it's like you're navigating through the various city blocks with different size skyscrapers correlating to the different activity going on in those products. It's definitely an interesting perspective on the options market, that's for sure.
Yeah, looking at it, it's a really unbelievable product. Just my tacit knowledge of it. I would equate it to, for the option trader, is if you're going to be an option trader, you can either be somebody kind of walking on the ground, kind of walking through these buildings, but to somebody that knows how to use this product properly, you can kind of become like Spider-Man, the way you're flipping through these buildings with speed and grace and agility. And I think that's kind of what having a guy that understands business development that has also been a trader is so important and so lacking in a lot of the technology development for pro traders. I mean, I think that's going back to Option Insider, not to sound like I'm kissing your butt too much, but that's one of the nice things about the Option Insider is that you have, because of your trading background, you know what traders are looking for. That's like our guest last week.
Henry
Schwartz, same thing. So from Trade Alert. That's been one of the great things about that I noticed about the Acumen product. So and it helps you just judge relative value. So is the move significant? Is the move significant for the sector, the group? Just besides, I like seeing movement right on the cusp. I mean, all the stuff that sticks out usually is outliers. But what I like to see is small movements becoming big movements, and that's what our software actually helps you do.
I guess I should probably spell out for the listeners who may not be aware of it that it is actually AQUMIN. So if you want to learn more about the product or see how it looks for yourself, go to AQUMIN.com, not the traditional spelling of acumen. So if you're typing that in, you're finding something weird, maybe a porn site, I don't know, but that's not where you want to go. Maybe some of our listeners are getting a very big surprise right now. They're like, wow, this is not what I expected.
Exactly. Yeah, that was our play on the word acumen. So, financial acumen, and that's how we got it. And the product's actually called Alpha Vision. And we'll be launching the retail version of it within a month. And currently, if you have a Bloomberg terminal, you just download it and off you run. It actually just drains your option volatility data out of the Bloomberg terminal.
Oh, that's great. So you're actually launching a retail version. So let's get into a little bit more of that thing. I know a lot of our listeners are in that high end to intermediate end of the retail spectrum. So what are you doing differently for the retail product? Is it a scaled down version of the Alpha Vision, or is it the same beast?
It's the same beast, but what we're doing is we're going to have 15-minute delayed data for the product that's $99 a month, essentially. So what you're going to do is we create market scenarios for people, so it describes volatility situations, stock movement situations. They click a button and it rearranges the entire market for them, and it actually lets them go in and interact with the stocks. And then they can start making trading decisions based on that. And that's kind of the scaled down retail version where we actually help bring you along. Here's historical volatility, here's implied volatility, here are some scenarios where there might be a mismatch between the two. And we walk investors along and kind of show them where there might be a break in the market or something that might be interesting for them to look at.
You know, that $99 price point is so golden for the high-end retail. You know, through a lot of the different projects we do on our Options Alliance arm as well, we're constantly asked by vendors, how do we hit this high-end retail options spectrum? What is the golden number? And for a lot of these products, if you hit that $99 price point, it really is the sweet spot. Because then someone who's even doing a handful of trades a month, it's still valuable to them.
Exactly, and they could. One thing new it provides, it also provides a great recap of the day across the entire market. You're going to see exactly what happened, the changes in volatility, changes in volume, all of that stuff. We can it for you, so it makes it easy to look for, the 3,200 different stocks. Mm-hmm. You can look at it in a second and get a sense of what's going on. You load a portfolio into it. It gives you a lot of ways to go. But the sense is, too, that's what I wanted people to do who are not on the floor or every day to get the same sense that, hey, I might not have been on the floor, but I get a sense of what happened today. And I just, that's where we are with it right now. I think we accomplished that pretty well. And obviously the Bloomberg terminal, if you already have a terminal, you load it on and it gives you access to the Bloomberg API. Basically every data point that you can pull into the Bloomberg terminal, you can pull into our application. So now all of a sudden it becomes a very complex, you can do equity analysis, option analysis, you name it. And that the creativity is really only limited by the user, by the Bloomberg user.
Personally, I'm always amazed at just how you find the time for the content. I mean, the Acumen blog is not one of these blogs that kind of does like once a month posts. You actually put up some stuff there on a regular basis. So in addition to your day job as business development, you do a fair bit of moonlighting as a blogger.
I do. I also post to Option Profits as well for TheStreet.com. And really the secret is our product. I mean, I'm not here blogging it, but it gets me the information so quickly, I never would be able to do the job that I do without it. Because I'd have about 40 or 50 preset views of the market, the way I used to like looking at it trading, that if I actually had to go through this all by hand, it would take me forever. I could never do it. But all I do is hit a button, and it shows me if there's anything interesting. If not, I move to the next thing. And it allows me to, and I get to search through every stock. So nothing really passes my view that I can't see at a click. And that's really what the value prop is, especially for somebody that's busy. It gives you the access very fast.
Well, Andrew, I want to thank you for coming on. We have to move on to our next segment, but I want to tell our listeners again, it is AQUMIN.com to check out the product and the blog. And I see here you can get a demo of the professional version online. I'm assuming the retail one is coming pretty soon as well.
It is. What we call is AV Pro really is going to be for is that 99. The other product is basically a professional real-time one that's going to be a lot more expensive, but it hooks into data management and risk systems. But AV Pro will be the $99, basically the retail product, what we call it.
Well, perfect. Andrew, I'm glad you could join us today on the interview block, and we'll definitely have to have you on again maybe for a future show when we have a little more time, and you could sit in on the whole show, and you could fire in commentary from the Alpha Vision product as you see things happening while we're talking.
Sure. Hey, I appreciate you having me. You guys have a good day.
You too, Andrew. And with that, we will close out the old interview block and move right into the odd block.
The Odd Block.
And welcome to the Odd Block. This is the segment of the show where we discuss some of the interesting and or unusual options activity that we're seeing lighting up our tape here at theoptionsinsider.com. And we're going to start it off with a name we joked about last show, but is actually doing some interesting activity today, and that is Krispy Kreme Donuts, Mike Tusaw's favorite stock of all time, right, Mike?
I thought it was Dollar General, wasn't it? Company or stock? Big difference.
A little bit of both. Can't you buy Krispy Kremes at Dollar General? That would be the ultimate heaven for you. Then you never would have to leave.
There you go. We can set it all up, and then we'll go over to Options Express and trade it.
That might be the way to save both Krispy Kreme and Dollar General going forward, is to give them an outlet in that store. Then, bam, you're done. All right.
It's funny, I remember just a couple of years ago when Starbucks was down as much as they were. I remember just thinking how the stock was you were almost better off buying the coffee than you were the stock because of how cheap it was a couple of years ago. And maybe that's the case if you buy a case of Krispy Kreme donuts or some shares of stock. But
Yeah.
you buy enough of it, obviously, just looking at it right now, holy cow, that's a lot of donuts.
Yeah, I actually have some fond memories of Krispy Kreme. I was actually down on the SIBO when they listed it, and so they came parading down to the floor with trays of donuts. It was fantastic. It was definitely one of the more popular listings that I can remember. You don't get many free handouts from the companies very often. Krispy Kreme donuts, ticker symbol KKD. They closed today at $7.44, up $1.28, and they had earnings yesterday. And people tended to like what they said, so the bulls are out in force today. Krispy Kreme came out yesterday, and they improved their guidance for going forward for 2011. It's been a good couple of days for Krispy Kreme. The stock's up about 20%. Actually, yeah, almost 21% closed today. So, yeah, definitely a strong surge, and the options traders think that surge is going to continue. We saw about 5,500 options changing hands today before noon Central here, so there was a pretty heavy day, considering that prior to that, all of Krispy Kreme options had a combined open interest of a little over 6,000. This is a busy day for Krispy Kreme. The bulk of that 5,500 contracts was calls, so definitely the bulls out in force. They started off scooping up the D7.5 calls, 1,350 of them for about 22 cents. Right now, actually, almost they were when they were buying them. They're out of the money now. They're pretty close to pretty much at the money calls, and they need to have a little bit of a run for these things to up to 7.72 for these things to break even. Obviously, the Jan 7.5s were also popular with the bulls. They picked up well over 1,000 of those for 34 cents a piece, and so 22 cents for the D 7.5s. 34 cents for the Jan 7.5. I don't know. Of the two of those, I think I might like Jan of those a little bit better. Seems like you're getting a little bit more bang for your buck on that one. And yeah, as you might expect after earnings, even with the buying activity, the implied vol is down about 9%, but you probably would have seen it down even more if the buyers hadn't come out in force today. So any of you guys active at all in Krispy Kreme?
Not in the stock, but I think I'm definitely in agreement with you in terms of like buying the Jans over buying the Decembers, just from the standpoint that if you look just from when you do the math on it right now, the last quote that I have for the 750 calls for December 30 by 35 cents, and then for January there are 45 by 55 cents. So for an extra 35 days. Or for an extra 5 weeks, I think you're definitely getting a lot more bang for your buck with this one. If anything, what I think might be interesting in this would be the January-December calendar spread. Now, once again, full disclosure, the only way I follow Krispy Kreme is through the donuts itself, but just in looking at the way in which the premiums are lined up on this, if this peters out a little bit for a few days, then the time decay on those December ones, the theta could definitely be of benefit. When doing this, obviously, if it goes to the moon, that doesn't quite work out as well as you'd like, or if it goes down a lot. But with the risk reward in comparison to the 2 months, if you want to be neutral on this over the course of the next couple of weeks, I think this would be a very interesting play to be neutral in this stock.
Yeah, traditionally you wouldn't dive into a short front month calendar the day after earnings because you've already missed your chance to hit the front month, but the implied vol isn't down that much in Krispy Kreme because of all the buying activity, so you still have an opportunity here. And those D's, I think they are a little bit pricey for what you're getting, so I wouldn't be uncomfortable at all going long the Jans and shorting the D's on that one. And then switching gears completely to JP Morgan. Not much of a segue really between donuts and JP Morgan. But JP Morgan, obviously JPM, closed 39.31, up $1.16 today. And this is a name that usually does some sizable volume. They usually do about 100,000 contracts a day, average daily volume. Today they did about 143,000, so a little bit of a strong day for them. The stock's looking up, and there was one relatively sizable player today who thought that this bullish trend was going to continue. He kind of came in and he bought 6,000 of the Jan 39 calls for $1.69. So these are at the money calls or a little bit in the money calls now. And he sold 6,000 of the Jan 43s for 36 cents. So he netted out to $1.33 there. It's a sizable trade, 12,000 contracts in all, and it's just interesting why I know, Mike, you're a big fan of the vertical call spreads. I don't know how active you are in JPM. I'm kind of neutral on this trade. I don't really love it. I don't really hate it. Obviously, the stock's got to rally a little bit, about 10% for this trade to break even. Looks like today the Bulls definitely outnumbered the Bears in JPM with a 3-to-1 call to put ratio out there. So not too much to say on that one, just a sizable bullish vertical call spread, saying that some people are thinking that the rally in financials is due to continue.
Over the course of the next couple of years, we're actually kind of bullish on financials as well. I mean, I'll be on my soapbox. I believe in hedging it and so forth, and we are putting put spreads and puts on to hedge our stock positions on it, but. Yeah, over the long haul, I think that financials are going to be a pretty decent spot to be, just because of the fact that if our economy does recover, I think financials are going to play a big part in it. They make up a big portion of the S&P 500, and as time goes by, if it's going to move, the financials are going to have to be a part in the movers of the market for the longer term. If you look at XLF, for example, it's once kind of been tinkering around the 14, 15 level for a while, and I guess I just don't see it staying there forever. So with this, we do have people in various financial stocks. JP Morgan is not one of them, but I'm definitely a fan of the financials over the long haul for sure.
Yeah, what about you, Rob?
Well, I think that financials are in a really good position. I think that after the assistance that they've received from the Fed, that they've really stabilized and cleaned up their portfolios, and you're seeing a willingness to lend, which is a sign that the companies are healthy once again. Just speaking to people in the car business recently, they're year over year, they're actually able to finance people with credit scores significantly worse than last year, meaning that the banks are starting to lend again, and banks can't make money if they don't lend. So not necessarily JP Morgan specific, although they do have Chase Bank, but just broadly, we're going to see some of the larger lenders probably get a little lesson from the recent housing downturn, but that's a early sign that the economy is good, and I think that the economy is starting to get better. That people's attitudes are changing, and it's also reflected in the retail sales numbers that we've seen. Overall, the consumer is getting a little bit more optimistic. Hopefully, this holds up all the way through the end of the Christmas shopping season.
With these retail numbers are any indication, it's going to be a stronger season. I think many people expected, even after Black Friday. Black Friday numbers were decent, but they didn't blow the doors off everybody. But I think the combined numbers with the rest of the month were stronger than people thought. I think particularly because a lot of retail firms had pushed the Black Friday stuff up earlier. They were doing pre-Black Friday sales. They were doing week ahead of Black Friday sales. So people were actually buying stuff before Black Friday, which is unheard of for this time of year. So and then spiraling away from the financial, we're just shifting gears left and right here, keeping you guys guessing. And we're going to jump over to a little biotech. Intermune Inc., ITMN, they are a little California-based biotech firm. They closed today $12.53, down about 24 cents. And they're a small name. They do a little bit of volume, though. They average about 4,000 contracts a day, so they're not inconsequential. Today they did over 8,000, so they doubled that. The bulk of that, actually, almost all of that, was in one sizable three-legged spread. This trader came in and he bought the April 17.5 25 call spread for $1.70. So that's 5,000 contracts right there because he did it 2,500 times each. At the same time, he also sold the way downside April 6 puts for 90 cents. So another 2,500 times. They did a little bit over 8,000 contracts today. This one guy accounted for 7,500 of it, so he did the bulk of the volume today. Obviously, this guy's a bull. He bought a out-of-the-money call spread, substantially out-of-the-money call spread, about 50% out of the money. At the same time, he also sold the 50% downside puts, both in April. Talked a lot about Mello over the past few sessions. This is another small biotech who's in the middle of the approval process, and their stock's been moving around quite a bit because of it. They have, a pulmonary fibrosis treatment that's being tested by, they got rejected by the FDA. That crushed the stock. Now European regulators are looking at it with results expected in Q1. This guy's obviously planning for those results because he's trading out to April. So yeah, this is another one of these ones where if you like playing these almost roulette wheel biotechs like we saw with Mela a few weeks ago, this is another one where they could have some substantial movement coming up before April expiration. It looks like they have some sizable premium to warrant that. If you're very fluent in the biotech sector and you want to take a flyer on a small drug stock, maybe you want to follow suit, because this one guy is definitely putting his money where his mouth is. He took up almost the entire day's volume today with his bullish three-legged spread, actually. And they also have earnings coming up in mid-February. So a couple of significant events coming up for IMTN in the next quarter or so. I don't know, you guys obviously probably don't follow this name. It's a pretty small one.
Yeah, but the biotechs in general, I mean, we see customers do these types of spreads or types of strategies a lot. And, it's a real risk reward. If you're able to, to minimize your costs and kind of build up a sizable position, it's really feast or famine. But sometimes the market just isn't. It's difficult to find a strategy that works. The equity markets have been so choppy that a lot of the credit spread strategies have been. Unless you've been selling some put spreads recently, have been really haven't been profitable. We've seen a lot of smaller traders get eaten up on some condor spreads. So sometimes if you're running out of ideas and you have an opinion on a stock, I mean, you have to go for it. With no risk, there's no reward.
Yeah, it's been so choppy lately. It's easy to get whipsawed on some of these credit spreads. People have been so fond of writing lately. Yeah, I think we're running a little bit long on the segment now, so we'll just quickly wrap it up here with a quick hit to New York Times. They closed at about $9, down about 10 cents today. And obviously, I don't need to explain what the New York Times does. I think all of our listeners are familiar with them. The Bears were out in force today on New York Times. This is a name that averages about 1,300 contracts a day. They did over 5,000 today, so there was some sizable activity going on out there. Looks like the bulk of it was driven by a report from the Newspaper Association of America. Said ad revenue was down. Was actually a positive report. They said ad revenue fell slower than expected. It fell 5% in the third quarter versus 28% a year ago. So that's actually, you'd think that would be bullish news, but apparently the Bears didn't think so. They were coming in to pick up about 2,800 of the Jan 9 puts for about 77 cents. That's twice a day's average volume alone on that one strike. And these people are obviously thinking that stock's going to plunge about 10% more from where it is right now. We also saw actually about a total of 3,600 contracts changed hands on that strike over the entire session, which is about 4.5 times the amount of open interest that existed previously. So a lot of people active right now on the Jan 9 strike, thinking New York Times is moving lower before January. And I don't think that's a particularly surprising bet. Most people, I think, right now are pretty bearish on print media in general. And I don't think these devices like the iPad and other things that many people had thought were going to be the salvation of print media haven't exactly turned out that way. So the Bears are coming back out in force again after the New York Times. What do you guys think on this one?
Yeah, I don't even remember the last time I bought a newspaper, quite frankly. It's, I hate to say it. I mean, I love the idea of newspapers and things like that, but especially at the national level, I guess it's a sad thing, but I think it's a changing time that we're in, and it's inevitable.
Yeah, I think that says it all. If you can't remember the last time you bought a newspaper, I think that's kind of part of the problem, I'd imagine, that's facing these guys. All right, and with that, I think we will close out the odd block and move right into the express/spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express/Spread block. All right, say that 10 times fast. This is the segment of the show where we sit back and listen to Rob tell us all the latest happenings over at OX. And it's been a busy couple of days for you guys over there. I know people are lighting up our tape with all sorts of inquiries and questions about what's going on over at OX, starting with the fact that you guys were featured on Cramer last night on Mad Money. He loves you guys. That's a mixed blessing, I would say. But yeah, that must have felt good for you guys to get a little bit of encouragement there.
Yeah, absolutely. I mean, it's amazing. You know, the guy is zany and does all types of crazy things on his show. But you know, he does have a strong following, and a lot of his advice, you know, relative to some of the other talking heads you see on TV is actually pretty good, and he doesn't go out there and just ramble on and unless he really has an opinion on a stock, and so it's encouraging. I know he's had our CEO David Fisher on a few times of late. So it's always nice to see your company painted in a positive light.
But anything else you want to talk about on the customer activity side or anything like that?
Well, the customer activity side, you know, we've seen the cyclical nature of currencies now start to heat up again. They come from a futures background, and it seems like currencies are either everybody's trading them or nobody. Or there are times where you don't even remember the last time you got a quote on a currency for a customer. So we're seeing a lot of activity, obviously with all the happenings in Europe. We've had a lot of customers trading, sort of trading the Philly and the ICE options to a lesser extent, and certainly trading the futures on currencies a lot more recently. That's overall the trading, we haven't seen any consistent pattern, and that's probably due to the flaky nature of the market recently, where we'll have two huge down days followed by two solid up days. So the currencies have been the mainstay lately. They've been what people have been trading.
Around the block.
And welcome to Around the Block. This is the segment of the show where we discuss what's on the horizon for the market for the next few sessions. And we always talked about employment numbers last show. That's still obviously on the horizon. But what else are you guys? Obviously, home sales was a big thing coming out today and yesterday. So what else are you guys looking at right now?
Well, as usual, I'm looking at volatility. And, we've seen the VIX fall 4%, over 4% in the last 2 days. We've seen the market rally 40 handles in 2 days on the SPX. That is a massive, massive move. So we've had huge realized volatility, and at the same time, we've seen implied volatility just get whacked. Now, not as much as maybe the VIX is telling us, because, as we all know, the VIX is not it's price weighted and Vega weighted, so it sometimes can get thrown off. But That said, a couple of big moves and relatively inexpensive volatility compared to moving 20 handles a day. So I'm actually going to be out there looking for possibly some cheap premium to buy. I may wait till after tomorrow's announcement. In fact, I'm going to have to at this point. But that's what I'm going to be looking for. If we get a pop on the open off data tomorrow, which is Friday, I may start to be somewhat of a put buyer. So that's kind of what I'm looking at around the block.
Yeah, I think a lot of people are getting to be a bit. I was uncomfortable with the levels of many handles lower in the S&P. So up here, I'm definitely looking at some downside and some upside in the VIX. What about you guys, Mike and Rob? What are you guys looking at?
Well, in a lot of our cases, just to kind of with this move, we're starting to sell some calls and kind of just do a couple things in terms of we're preparing for a pullback, so to speak, and nothing huge because we're typically looking at the entire portfolio, but in a lot of ways. When you get this big of a movement, it's the old song, what goes up must come down. May or may not happen. Who knows? I don't have my crystal ball with me today. I think Mark stole it from me, and he's playing with it in New York or something. But what I just realized that what I just said, that you can take that several ways. I walked into that. But anyway, what we're also looking at.
I thought your wife had your crystal ball.
Yeah, okay. I figured you'd kind of finish that before me.
You did kind of serve that one up for him pretty nicely.
Yeah. So when you stare at a screen all day, sometimes stuff like that comes out, I guess.
No kidding.
A stock screen. Never mind. I'm just what we're looking at in the market right now. The other things with which we're looking at, the 1220, 1225 levels. A few weeks ago, this is where we topped off at in the S&P, where we're at right now. So I think tomorrow is going to be very interesting, and I'm going to have my eyes glued to the streaming quotes around 7:30 a.m. Central Time just to see how the pre-market's reacting to everything, because there's a lot of reasons for a lot of different things to happen and for a lot of things to go a lot of different ways. So tomorrow I do not see as a boring day.
And what about you, Rob?
Likewise, just like equities with commodities, we're seeing the prices quickly approach levels that have been stumbling blocks. Four that really come to mind: crude oil, copper, gold, and wheat. Wheat's flirting with the 750 level. It jumped up today or yesterday and today because of some of the Pacific Rim countries, Australia and possibly Indonesia having a weaker crop. If equities begin to pull back, I think we're going to see some of this enthusiasm for commodities wane as well. Next week is a really light report week. And given the really strong home sales numbers today, I think that mortgage application number this next week may not be something that people glance over when they walk in the morning. The MBA mortgage applications to see if there's some kind of a hint at following through. Because we did have no yields jump to the highest level in 4 months, so maybe that's going to have some spillover into the mortgage application figure. So we may see kind of a little reversal in both of those numbers. Maybe some of those mortgage applications that number may pull back a little bit over last week, and we may see yields pull back a little bit as well in some of the notes and treasuries.
That's going to do it, actually, for this episode of the Option Block. I want to thank all you guys for making this a great episode. Mike Tusaw from Know Your Options, Inc. Anything special you have going on over there in the next few days besides your collar update?
Just nothing too special, but we are going to start having a few more. We have stuff that we have on our website, on our blog. Just go to knowyouroptionsinc.com. There's always something going on with webinars and newsletter updates and things like that. Stop on by.
Great, yeah. So visit Know Your Options Inc. if you want to know more about Uncle Mike and his various collar strategies and vertical call spreads, of course. Also, Options Express, obviously not a hard one to find. If you want to just go to optionsexpress.com. If you want to watch the stock and figure out more about that dividend, then just check out ticker symbol OXPS, and you'll find a wealth of information there. Of course, Greasy Meatball can be found at optionpit.com. I always want to say the Option Pit, but it's optionpit.com. And you can read his blog there and check out some of his picks. And of course, our guest today, Andrew Giovinazzi from Acumin, AQUMIN.com. They have a lot of interesting content over there. You can also find a lot of that on the optionsinsider.com, my website, where you can also find a lot of this unusual activity content and all the news and other topics that we discuss throughout the show. I want to thank you all for listening and downloading and streaming the show and making the show such a success. It's for you guys that we do it, not just for our own health, even though we do like sitting around and chatting with each other a couple times a week. But I want to thank you guys again for listening, and we'll see you next time on The Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.